But first, break out your Palm Pilots and baggy overalls because we're throwing it back to 1997. Wow. Yep, 1997. That's because the S&P 500 is having its best start to a year since then. Oh, and if that song you're hearing, you fast money fans out there.
Very familiar.
No, not one of our traders losing a fast pitch, not yet at least. That's Tony Braxton's Unbreak My Heart, which was topping the charts in 1997. Meantime, back at the box office, a little movie called Titanic was smashing records. So here is the question as we head into the fourth quarter. Will it be smooth sailing for stocks, or like the Titanic, is the market headed for a giant iceberg?
Well done, Mel.
Guy Adami.
Really well iceberg ahead, right?
Iceberg or smooth sailing? Choose your own adventure.
You know, it's funny. I watched that Titanic movie when it came out.
Yeah,
it was a good movie. It was very realistic. Like you felt like you were on the boat. Remember? I mean,
the
all right,
graphics.
Tim's giving me the look. You know, the thing about icebergs is, just to sort of get some science here.
Thank you. I was waiting for that.
You only see this much of the iceberg. Most of it's
They should have a saying like that.
below water. Below the water.
Yeah.
So the market has done an incredible job of navigating through what have been numerous icebergs this year. It's weaving its way through. The people standing guard have absolutely seen the tips of those icebergs. Now, I've thought incorrectly that these small little icebergs in the water, they're huge ones underneath. But so far, so good. I'll say this. The VIX at 17 or 16.5 in this environment, giving everything we've seen over the last couple of weeks, is too cheap. But the fact that the market continues to navigate through what I think are landmines is extraordinary to me. Iceberg, sorry, wrong metaphor. Sorry.
From an iceberg to a landmine.
I think technically the market sets up. First of all, I agree with Guy. I think that everyone is positioned for all this negative space, and I think we're going up from here. Having said that, technically, I think we're challenged. I think we close below a retracement. That makes me worried. So maybe not so clear.
Not so smooth sailing, not so much smooth.
Well, you know, leaving aside all of these great metaphors, I mean, you think about where we were in 97 versus where we are now, and you had globalization was on the tip of everyone's tongue. We were in a place where actually you had reflation, you actually had asset prices moving higher, you had commodities about to embark upon a massive, actually after we got through a crisis of 99, I should say. But the point here is, I think the environment now is a post-crisis environment, and if anything, we heard this morning from an important central bank, not the Federal Reserve, but the Bank of Japan this morning told us we actually are going to be maybe trying to steepen our yield curve. We're not of the view monetary policy can solve all issues. But we had no idea in 1997 what central banks would eventually do. And to this point, to Guy's point, you can't navigate what looks like a small iceberg above water if it's a bit. But the flip side is central banks have actually made all those people expecting there to be icebergs underwater actually be traveling very slow through the Arctic when you could have been scooting through for much better returns.
I hope you got something here, Pete. I hope you got something here.
I don't
very
know
different
what
environment.
that exactly means.
Scooting through the Arctic.
I would say this, that we have two major catalysts now in front of us. We had one, trade war. Now we got number two, the impeachment inquiry, right? I mean, so we've got two major catalysts that if we can navigate through the icebergs and get through
Those
all
are the
these
two major icebergs that you see ahead.
Yep. Those two are massive to me. I mean, we've dealt with but we've been dealing with the Fed, and we've been able to navigate through the Fed, I think, pretty well overall. But obviously, the trade war is something that we all are continuing to look at. Here we are near the highs, right? The S&P is near the highs, the Dow's near the highs, Nasdaq's near the highs, all this stuff. And yet, we still don't have any answers. We don't know when we're going to get any of these answers. And people are sitting there waiting, Mel, not wanting to miss out. But are they missing out? Are they long enough if we actually get this thing settled? I mean, there's a lot of things going on. Volatility is as low. It's amazing how our volatility is low, given the fact that we've got all these icebergs surrounding us.
Are we how are we positioned at this point? I mean, defensively, going into the fourth quarter, I would imagine.
Overall equity positioning is such that a lot of people feel we could be on a sinking ship, and that you have a backdrop here where we're not just going to have a recession, we're going to have the type of a pullback that would have a major market bottom. And so when we have people come on our show and they talk about scenarios, one of them are major drawdowns in markets. Now, we all know if you look at some of the big recessions, and people generally cite 2 or 3 of them, we had drawdowns anywhere from peak to trough of 40 to 60%. That's not counting the financial crisis, which is a little bit deeper than that. to me, that is not what we're looking at. If anything, we've seen a lot of this coming for a long time, and a lot of this has been priced in. Look at the market's move over the last 6 months. While it has been somewhat higher, think of the defensive rotation that's gone on. And you can make an argument that equities have positioned for a much bigger fallout than they actually are going to have.
Yeah.
But position with protection is what I would say. I mean, honestly, what you're talking about right now, when you said, yeah, we're down in the low 16s, which is exactly where you were. We were 17.5 on a big spike just last week on Friday with the sell-off. So look at how inexpensive we really are looking at, Mel, right now, given what we've got in front of us. I mean, this is the time to have that insurance policy on the boat as we go through this whole thing.
But you call a life jacket. You call a life jacket, Pete.
No, it's not. This is truly, I'm not kidding, this is truly the insurance policy on the boat.
You
and you better
made
be
the
paid
analogy,
up.
though, to 97. The analogy is to December, to last December.
That's what I was going to ask about.
So for me, everyone is positioned for it to be another negative December, and I don't think you're going to see that. So I think we're positioned to have a coiled spring to the upside.
There are little things that remind you of last year, aren't there? I mean, FedEx, Micron, and Carnival.
There are a lot more than little things. They're big things. And the fact that U.S. 10-years have gone now from 147 up to 182, I think it topped out at. It's back below 170 now. The bond market, all of a sudden, very quietly, yields are going down again. Con Edison, I know it was unchanged today. That stock continues to make an all-time high. Names like Procter & Gamble are, in my opinion, too expensive. But Tim mentioned something, and I think it's really important. Speed, the speed of the boats. If you recall, the hubris of the Titanic was not just that it was unsinkable. They were going too fast. And this market has not been going full.
Pete, I think you're king of the world.
That was a more you know
you're
thing.
king of the world.
No, it was the Titanic.
Oh, it's a Titanic
It was the
bell.
Titanic
I don't
music.
know
If you listen very, very carefully.
But really quickly, what makes all this, I think, just a metaphor is half the reason why we've had this start to this year is because of the December 2018 we had. We wouldn't be talking about this year in terms of performance through 9 months if we didn't have a 22% pullback in October into the year end. So really, where are we if you kind of eased out some of that or softened or smoothed out? We're probably up 6 or 7%, right? Nothing to be extraordinary about, and a market that, again, from a positioning perspective, doesn't tell you that we're going to fresh new highs.
Before we go to Carter, can I just mention I got married in 97. I think you did as well.
97.
So just as a reminder.
Same month.
Right, same month. Just so you're good with your wife on that, because I just...
No, I know that.
You didn't say anything about it.
What am I supposed to... You
could have mentioned it. 1997.
I was born in 1963. We can do this all show. Sorry.
2 days before me.
You guys...
4 days.
What's happening here?
You were going to make a point.
That was it.
Oh, that was
He
it.
forgot. He forgot his point.
Yeah, that was it.
Sorry about that.
That's a really great point to make.